All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for about an hour. Been an interesting hour. Here in the market, we saw a drop here. Let me show it to you. But you see kind of the open, and market drops off the open. Okay, only about 6 points. And then we get this spike down, and you can see the volume. Volume's monster. It's massive volume here on the spike down. What's going on? Well, we didn't see a lot of the news outlets reporting it right away, especially online. I wasn't watching TV, but, the different online sources, we didn't see anything. But ultimately, it came out. We did see some on the, more expensive paid news sites. But Chile canceled an economic summit scheduled for November, where U.S. president and Chinese premier were set to meet, and there was talk that maybe an interim trade deal could be signed at that meeting, but due to some civil unrest and whatnot, Chile had to cancel that meeting. Right, and you think about it, it's okay. That's kind of a stupid reason for the market to drop. If they're going to meet, they're going to, they'll make another time meet somewhere else. It's not, end of the world type of thing. And we've seen the market, kind of, snap back to a little bit of reality here since. But it is a day where, the market is red. We're seeing the S&P down 5 points, small caps down 8. So we have quite a bit of red on the board out there, for the market this morning. But, we are still looking at high differentiation in stocks. Banks are lagging, but tech is holding up, right? And so we see some of the recent leaders becoming laggards and vice versa, but not in a huge way. Let's get to the challenge here. We have two positions on the board. Micron 162 and Netflix 1335. So let's go put those in here. 1335 and 132 here on Micron. So that puts let me make sure those are correct here. No, I got something incorrect here. 162. My apologies. My apologies there for my blindness. All right. So that puts us here with the challenge just shy of 4,000. Netflix getting the move, starting to get the move we want to see. We are looking at a profit target of 30309. And if we look, we're still plenty shy of that, right? There's plenty of room to run, here for Netflix. I was asked yesterday about this candlestick pattern right back here in the middle of October on earnings and what its significance and meaning. And my response was, for the challenge, absolutely nothing. Right? Challenge doesn't take into account candlesticks or weird moves like that. It just doesn't, and there's good reason why. Because even with candlestick patterns, the best of the patterns have about 60 to 65% accuracy, and so is it one to really pay that close attention to? Well, I'm not, right? I'm not. So, it's nowhere close to the profit, or it's not at the profit target here yet. With Micron, we have a stock exit level of 47.04. Micron's trading at 47.80, so we're still in good shape there. Have given back some of our Micron gains that we've had of late, but we have that severely trimmed position here with it. Now, I mentioned in the note this morning, Micron, we're not holding, not at the position yet for the challenge. We're going to hold earnings trades. But when it comes to Micron, we've held Texas Instruments earnings, right? We've held Intel earnings, and we have now held AMD earnings, right? So 3 earnings reports, and then the biggest update that Micron had, none of the companies reported. So it's just one of those that is going on here. If you look at AMD, today getting trimmed here just a little bit after its earnings, and pretty much trading right along with Micron, albeit Micron down to a much lesser percentage here. What would be really nice to see is I'm fine. Micron close here, right? Close around this level, and then even a little lower, right? Even a little lower isn't a bad thing. And okay, Jeff, how dare you say that? You're in an option trade to the upside. How dare you say a little lower is fine? But from just a pure charting technical standpoint, a little lower and then a break above this morning's highs early tomorrow morning would be a very bullish sign. We had something similar with Netflix kind of shape up here today, where, yes, Netflix went down yesterday, and then it went up, and then it pulled back into the close, and, overall candle very insignificant, except for we break above yesterday's highs. Chances are we're going to see some more buying, come on in, and that's what we have seen as the highs, not only from yesterday, but from Monday, have been broken here. All right. The scans for the challenge. We don't have any new trades on the board. This is the bullish scan: Verizon, Twilio, J&J, Boeing. Boeing potential, to trigger here today. None of the others are going to trigger or have that potential really to trigger. And if we look at the bearish side here, the downside 3-7 crossovers, we have CSX and UPS. Now, UPS was one that had an upside crossover just a few days ago, but didn't create a trigger. Today has a downside crossover. It could create a trigger. There's more chance of creating a downside trigger at this moment than an upside. But we'll see how that plays into the close. And then CSX, which is one that I have not traded much of late. But, we saw the July earnings and talked about the July earnings. And, these October earnings were much better for CSX. And so I would not be surprised to see it push back towards the 80s. But a little bit of pullback here. Not anything I'm too upset about. I'd love to see some pullback and then, an upside trigger to be able to play. As it sits right now, the consolidation risk on it is just too high here on the downside. And yes, the algorithm is still tweaked to, be a little tighter for downside trades and a little looser for upside trades just because of the market environment. But if and when the environment changes, we'll tweak that. We'll alter that here a little bit. So that's where the challenge sits right here. Just shy of 4,000 and, in running here. So I think we hit a low of about 1,400 on the challenge. Right now we're hitting a new challenge high, at least for this challenge. And, it would be nice to, see some Micron and Netflix follow through, push us into our first double and, be off to the races here. All right. So anyway, that's the market and that's the challenge. Now we do have something on tap here today, and for that reason, I'm going to jump on video this afternoon, 15 minutes later, and so I won't make a trade at the 12:30 or 2:30 Eastern time period. I'll wait 15 minutes and then jump on, and we'll go take a look at the trades and see if we have to do anything with them. But what's happening is we have the Fed. And I'm going to come into the CME Fed Watch tool, right? And this is a great tool if you want to know what the market is priced in. They use money in the market, not analyst commentary, theory, idea. But if you want to see kind of what the market is, what the market is pricing in and expecting, here you can see it with the. With the Fed Watch tool. And we can see the current target, the current FOMC rate here is 175 to 2. And it's showing a 99.5% probability that it goes to 150 to 175. So basically a 0.25 basis point cut. Here, a small probability that they do a 0.5% cut. And we have seen historically that when the market has priced it in, the Fed does it. The Fed does not create waves and do something that the market hasn't priced in. The Fed almost always, does what the market is priced in. And let's face it, what has the Fed done? The Fed, the Fed has created this pricing in before the action based on their speaking, based on some of the Fed actions that have been taken. And so it's a foregone conclusion here that the Fed's going to cut rates, right? It's not like the headlines are going to come out, Fed cuts rates, and everybody's going to be surprised. In fact, very few people will be surprised. If the Fed doesn't cut rates, then there's a big surprise, right? And we will see a big reaction. They're probably initially to the downside and sharply to the downside. But the market's going to be looking at, what are they looking at for December? And right now for December, they're pricing in a 26% chance that the Fed cuts rates today and in December. Right, so we'll see kind of what the Fed says about that. If they are looking for another rate cut before the end of the year, and we'll see how the market reacts. It's like any other Fed meeting. We're going to get a reaction. We're going to get a reaction high. We're going to get a reaction low. We're going to go back to where the market was ahead of the Fed, and then in the next morning we'll get a little bit more reaction, and then it'll be done. And it's something where, from the challenge standpoint, it just doesn't matter. The trades are what they are, and the price levels are what they are, and the decision-making process is what it is. It's not something like, oh, well, the Fed here, so we got to blah, blah, blah. No. Now, are there some lotto plays and things like that can be done around the Fed? Sure. Is it something where I look and I say, well, this is a foregone conclusion for me and I'm going to go jump in here or there? No, not really. Not really. I think one of the more interesting lottos is a put on the banks. But again, that's just a simple lotto more than anything. And I wouldn't be surprised. I would just simply not be surprised if we see a rather flat reaction out of the Fed here today. All right. Thanks for hopping on. I'll jump back on here 15 minutes after the Bernanke press conference, so at 2:45 Eastern, 12:45 Mountain. And we'll talk to you then. Take care.